Now, you've said that this is the beginning of what could be an ugly period for oil prices. Explain the reasoning here.
Well, it could. It just comes at a terrible time in the oil market. We have a global growth has increased demand for oil, and at the same time, we have one of our significant producers in Venezuela, which is on its way to becoming a failed state. And so those guys are shedding oil production every month. So the oil market is tightening. And so at the same time, we have about 2.2 million barrels a day coming out of Iran. And if that goes offline, which is the White House stated opinion, they want no oil exports out of Iran, oil prices are pretty much going to get squeezed higher.
About 3 million barrels a day. Let's just round it up a little bit. Matt, contextualize this, though, for people who are not super familiar with the oil market. What portion of that would the U.S. consume, would the U.S. buy?
Yeah, okay. So let's just talk about where Iran's oil is going to go. Because if it comes off the market, you're going to have buyers from South Korea, you're going to have buyers from Japan, probably India looking for that extra oil. The suppliers would be probably Russia, some from the U.S. and Saudi Arabia, obviously. The interesting kind of dynamic here is that China was taking about 600,000 barrels a day of Iran's oil. And the latest data just came out and showed that China has come up to over 800,000 barrels a day, which is about 36% of Iran's total exports. And it's a pretty significant jump for them. It's about 75% increase over the last 6 months in Iran's oil. So China, to me, is the wild card in all this. Depending on how much of that oil they take from Iran, will kind of help figure out where the oil price goes. But regardless of how much of this oil stays in the market and how much comes out, what you have to understand going forward is nothing else can go wrong, or else oil prices are really going to spike. So we need the Middle East to stay calm. We can't have any more interruptions of supply. We can't have Nigeria go rogue. We can't have Libya have problems. If anything happens in the oil market going forward, oil prices are really going to be volatile and probably spike much higher to the upside.
That's a lot of if there, Matt. And I mean, we can only control for so many factors. The ones that you listed are almost completely out of the U.S.'s control. I do want to hone in, though, on the China aspect of this as well, because we are locked in this trade war tension, trade escalation, whatever you want to call it, with China, the country just, again, threatening, again, another round of retaliatory tariffs, $16 billion. Does China know its role in this particular case here with the oil prices as well? And is that something that they may use in the bargaining going forward with the rest
Absolutely.
of the tariffs that they're? I'm sorry, what were you saying?
Absolutely.
Yeah.
I mean, China has the ability here to mess with the U.S. role in Iran. If they, and it seems to be that that's the direction they're taking, simply by increasing their imports from Iran, they could have a pretty significant disruption in the sanctions process. And you also have they have the ability to then stop taking U.S. exports, because they do take a significant amount of U.S. crude exports. We don't export a lot of crude oil relative to the rest of the market, but China does take some of that. So by stopping taking U.S. imports and taking more of Iranian imports, that's basically a stick in the eye to the White House.
Matt, help us paint a picture for consumers about where this hits them. Obviously in the form of higher gas prices, obviously in the form of higher airline ticket prices, but where else will consumers be paying for higher oil prices?
Well, I mean, oil is the most fundamental tax on everyday Americans, right? It's an instant inflation. Oil price goes up, and it costs more to take the kids to school. It costs more to go to the grocery store. It costs more to buy the things that you want at the grocery store. Or, your Amazon Prime has to cost a little bit more because it costs more to deliver it to your door.
Amazon has actually, in the past, they've said we're raising Prime prices because of higher energy prices.
But let's not forget also the role that oil plays in the production of our plastics and other parts of our supply chain. It's not just in these big crude barrels that we all have to refine for use in these types of energy. Right, in terms of producing energy for us, but again, in these components, in the ingredients of our everyday lives as well. So that effect, I think, will take a little bit longer for us to see because of all the supply chain issues.
Matt, before we let you go, who are the winners here? I mean, obviously consumers are losers when this goes up, when prices go up, but who are the winners here?
Yeah, you know, right now I'm looking at a couple places. I think pipelines in the U.S. Obviously, more demand means every inch of pipeline space in the U.S. is going to be full. So we're looking at collecting dividends from these big pipelines. They're basically the toll roads of the oil supply. Also looking at U.S. refiners, because what we see right now in the U.S. is a big discount. West Texas shale oil, so the stuff coming out of the Permian Basin, trades between $10 and $15 below WTI prices right now because there's a giant traffic jam getting it from West Texas to the refiners. So the refiners get to buy cheap crude oil, and then they can sell the refined product on the international market and compete with everybody else.
All right, Matt Badiali, Senior Markets Analyst at Banyan Hill Research. Thanks so much for joining us on Cheddar today.
Thanks for having me.